Hi, this is Joe. I'm going to talk in this video about using small local banks and credit unions. Hi everybody, this is Indiana Joe again, Joe Jurek. Today I'm in front of a small little local bank or credit union in my area, and what I wanted to tell you is you can really leverage small local community banks or small credit unions to your advantage. Now, I'm not talking about a big chain or a big bank like a Wells Fargo, Citibank, Bank of the West, Bank of America. I'm not talking big, I'm talking small, local, community. Sometimes they only have a couple branches. However, there are those smaller banks that are privately owned and they might have 10 or 15 branches, but usually it's those banks or credit unions that only have a few branches. How can you find out? Go to the bank's website and read the About Us. In the About Us, it's going to tell you, we were founded in 1922 and now we have 3 branches. It'll usually tell you in there how many states they do business in, how large the bank is, when it started. If you get lucky, it might even give you bank officials right on the website of who you can contact. So don't underutilize the benefits of a smaller bank. There's 2 really big advantages that I want to talk to you about. Advantage number 1, a lot of small local little community banks and credit unions have to foreclose and take back properties. When they do, they ultimately go through the foreclosure process and have them on their books. In some cases, they'll list these foreclosed properties with a realtor, but wouldn't it be to your advantage to get a lead on a few properties before they actually list it with the realtor? Well, this is where it comes into play. Contact your small little local bank or credit union and ask them who would be in charge of the properties that they take back under foreclosure. They should give you the person's name. Then contact the person and you have to work on establishing rapport with that person. A lot of times banks are very private and they don't like giving out a lot of information. So just explain to the banker that you're a local real estate investor looking to increase your portfolio and you're looking to acquire more properties, and you thought they potentially could have some properties that you may be interested in. They might ask you, are you interested in residential, commercial, raw land? And that's where you can go in to say, well, myself, I might only be interested in residential. However, I do have a few partners or business colleagues and they do like raw land or commercial properties. That way you never ever forget anything when it comes to getting a list from your local banker. Just because you're not interested doesn't mean somebody from your buyer's list may not have an interest in a specific type of property, like a commercial building, a commercial business, raw land, whatever it might be. The key is see whatever they got at what price and see if you could work out a good deal for that. Once you work out a good deal, it could be something for you that you buy and hold, maybe as a rental. You might be able to acquire it and buy, fix, and flip. You might be able to lock it up under contract and even do a double close. So there's any number of strategies that you might be able to do. It all depends on what type of deal it is and what price you can get it for. So just to reiterate, benefit number 1 by contacting small local banks or credit unions is to find out if they have any foreclosed properties that they'll work with you and potentially lead to your next deal. Now, benefit number 2, a lot of little small local banks and credit unions have money to loan. When I was driving in the area today, I saw a big billboard for one of the local little banks. It said, loan sale, come in today. So are they motivated? Yes. Do they have money to loan? Yes. And a lot of small local little banks want to loan to people that they trust and you can establish a relationship with. What you're looking for in these local little banks or credit unions is, will they loan on potentially properties that maybe you just bought to hold, that they'll give you a loan with no seasoning requirement. By seasoning, that means how long you had to own the property. So let me walk through an example with you. Maybe you find a screaming deal on a single family house. You don't have the cash, but you have access to hard money. Hard money is easy to get, but they charge you a high interest. Maybe you can go in, acquire the house, do the fix-up with that money, and then go ahead and go to a local small bank to do a cash-out mortgage or refi. It's technically not a refi because you own it, but you put a mortgage on the house based on the equity in the property. A lot of small banks may have a seasoning requirement that you have to own it 3, 6, 9 months. If they don't have a seasoning requirement, that's benefit number 1. Then benefit number 2 would be how much money will they loan you based on the appraised value of the house. Not how much you have in it, but how much it appraises for. We could have a house that appraises at $100,000, and if they only loan you 70% based on appraised value, they'll loan you up to 70. So if you can find a house like that, maybe buy it at 40, put 10 or 15 into it, so you're all in, for maybe 50, 55, 60,000, and they're willing to give you a loan at 70%, and based on comps of sold properties in the area, you feel it's worth every bit of 100, 70% is still going to get you all your money back and then some. If they only based it on the amount you had into the property, 70% of 50,000 would only come out to be 35,000. So when you're looking at it, it's very important to know how much money they will loan you based on the amount of the appraisal or how much you have into the property. So that's benefit number 2, looking at a local bank to be able to refi a property to pull cash out of it. So I hope this video has been helpful. Good luck driving the area, talking to your local banks. Until next time, believe and achieve. Take care. Bye-bye.